What's good, y'all? Welcome back to another episode of the Beginner's Blueprint. I'm sorry it's late. I was supposed to release it at 1. I'm just making the video at 1:48, so maybe like 3 o'clock it'll be ready. Anyways, today we are going to be learning about conditions. I use conditions mainly for just creating assumptions to get confirmation for an entry, right? So the more conviction I have, the more probable either my entry is and the more confident I feel about it, right? So exactly what I put underneath it, want to stack probability to get the best possible entry with the most conviction. Okay, and then we'll go over this example, right? Don't be frightened by what you're looking at. We'll go over it multiple times. Another reason why I use conditions is it helps your win percentage a lot, right? Because you know what trade's a good trade, what trade's a bad trade, right? And then it also helps my psychological, because when it's time to execute, I know it's a high probability trade and I'm already ready for the execution point. That's the only point I'm waiting on. Everything else is already filled out. My stop loss, my take profit, right? I don't got to do anything other than wait for an entry. So that's how it helps my psychological out. Jumping into this example down here though, I'm pretty sure I made it pretty clear, right? So here is our just normal reversal situation. This is what typically I use conditions in the most, even though I use them for everything, but they help the most in reversal situations, right? So what is a condition? Well, it's essentially an assumption that you get confirmation from, so then you can execute, right? So what is price doing right here? Price is just trading higher, clear uptrend. What do? Well, we hit a high time frame key level. So what happens at key levels? Most of the time, we are going to reverse price. So if we hit this high time frame PD array or a high time frame key level, we can anticipate a possible reversal. But we don't just want to enter off just a single candle rejection, right? We want to build conviction. So how do we do that? Well, say we tap into the high time frame PD array. What do we do after? Well, we do end up rejecting it. And when we rejected it, what do? Well, we inverted this 5/15 minute fair value gap. That was a bullish gap. So that is going to be our condition 1, right? Our condition was that 5 or 15 minute fair value gap that was still unfilled. And then what did price do? Price ran through it, indicating a possible shift in order flow after tapping into this high time frame PD array. So we inverse our condition 1. Then what do we do on the way down? Well, now we opened up a bearish fair value gap. Okay, so what do I want to see from here? I don't want to enter all the way the fuck down here. What do we know about fair value gaps? Well, price retraces to them a good portion of the time. So that would become my condition 2, is that 5/15 minute unfilled fair value gap that opened up. What do we get? We get a push back into that fair value gap, or our condition 2. And now what am I looking for after another bearish PD array gets hit? Again, confirming my bearish bias. Well, I'm looking for my entry point, which is going to be the lowest time frame inversion through the 1 through 5 minute, right? So in that leg up right here, in this leg up through here, what is the highest time frame fair value gap we're looking to get inverse on the 1 through 5 minute? Okay, so let's say this example is a 2 minute fair value gap. We went ahead and inversed that fair value gap. Now what do? I'm then shorting from here, stops at these highs inside the fair value gap, and then my take profit points can either be this sell side liquidity right here, right? Maybe we have an unfilled fair value. Oh, hold on. Maybe we have an unfilled fair value gap right here that we can target also as a take profit. So that is where our take profit points can be, right? Sell side liquidity, unfilled fair value gaps, anywhere from 5 minutes to the 4 hour or daily, right? Really doesn't matter the time frame as long as it is above a 5 minute. So let's go over this one more time. What is price doing? Price trades higher in a clear uptrend, right, into a high time frame PD array. What do we do when we trade into a high time frame PD array? Well, we can anticipate or assume a possible reversal, right? So this is now our assumption. So if I do want to see bearish bias play out, I want to see price reject this, disrespect bullish order flow, bullish PD arrays, create another bearish PD array, tap into that, and then reject it, right? So what is our first step? Well, it's assumption. Okay, so we tapped into the key level. What do we get after we tapped into the key level? We get our first confirmation, which is going to be what? We inverse this 5 or 15 minute bullish fair value gap. Okay, if I want to go bearish, I want to disrespect all the bullish PD arrays. Disrespect the 5/15 minute, 5/15 minute bullish PD array right here. Cool. What else gets created on the way down? Well, we open up a bearish PD array. Again, 5/15 minute fair value gap. What do we get? get a retracement back into it. Boom. Confirmation 2 is done. Now I'm only looking for our entry point, which is going to be a rejection out of that and our lowest high time frame inversion, or our highest low time frame inversion. Sorry, my dyslexia is kicking in. So what do we get after we tap into the condition number 2, which is going to be our bullish middle time frame fair value gap? Well, we end up rejecting it. How do we know it's a valid rejection? Well, we get in again a disrespect of bullish order flow on the lower time frames, confirming our entry. We enter, target what? Sell side liquidity, and also an unfilled, let's call it an hourly fair value gap, right? It can be a 5-minute, 15-minute, hourly, 4-hour, daily, weekly, in the week opening gap, doesn't matter. Okay, and that would be our execution point, right? So after price inverts our first condition, we then open up a bearish 5/15-minute fair value gap, which is going to be condition 2, right? Tap into it, we see a rejection and inverse a lower time frame bullish fair value gap on the 1 through 5 minute chart. That is going to be our execution. So this is a classic example of a reversal, you can say execution, using conditions. Okay, so let's jump on down here to our continuation example, right? Again, if we are in a clear uptrend and our draws on liquidity are a lot higher and we haven't taken them out yet, let's say that is take profit 1, this is take profit 2. What are we doing? Clear uptrend, but we don't want to buy all the way up here, right? Because we want to get the best case scenario. So what do we have? Clear uptrend, price leaves a bullish fair value gap unfilled below us. Okay, so our assumption is, again, I don't want to buy up here because it's too premium. So what am I assuming? Okay, if price comes down into here and we see a rejection and this, these PD arrays up here are still either unswept or unfilled, whether they're fair value gaps or session liquidity, high time frame liquidity, right? Doesn't matter. Well, then we still have a clear draw on liquidity. So what do we get? Price retraces into the 5/15-minute fair value gap, which is our condition, right? We assumed it might come down here, and if it does, which it did, we got confirmation, came into our condition, and then what do we see out of it? Well, we see a lower time frame inversion out of it. So our continuation models, I'm going to long the fuck out that shit, stops at the lows inside the fair value gap, and take profit to whatever is up here, right? Whatever draws on liquidity are up here. Pretty simple shit. Let's move on down to our lower time frame condition example, right? So say, what do we know about 9:45 to like 10 o'clock, right? Price starts chopping. Okay. And then what do? AMD, accumulation, manipulation, distribution. Okay. So if we're in a uptrend, what can we assume? Manipulation lower into this unfilled fair value gap, and then we can target this bearish fair value gap up here. But if we open high, leave all this LRL and this unfilled hourly below us, and we actually tap into a bearish fair value gap, then we can target all of this right here, all this LRL. And again, if you guys watch my previous videos, you know what LRL is, you know what key levels are, etc. Right? You know what open, low, high close is, open, high, low close, AMD, all that. So what do? 10 a.m. opens. We manipulate higher after our accumulation. Okay. We come into this bearish 15-minute plus fair value gap, and we have an unfilled hourly bullish below us, and we have all this LRO below us. Well, if price leaves, let's call it a 3-minute fair value gap right here, and that's the only fair value gap in this leg, and we see an instant rejection of this bearish fair value gap, and we have good draws on liquidity below us, well, then this lower time frame fair value gap will then become our condition. So what do? We tap into this bearish 15-minute, instantly reject it, inversing this 3-minute fair value gap, bullish fair value gap, right? We want to disrespect bullish order flow if we're shorting. We disrespect it with speed, right? Price isn't chopping around. We instantly tap up after an open high, right? So now we want to see a low close. What do we get after it? So that is our condition. We then inverse our condition. Where the fuck is the short position? There it is. Holy shit. Stops at the highs inside the fair value gap. Your take profit can be this unfilled fair value gap right here, this bullish gap. And then your break even point, if you guys wanted to go break even, can be like this sell side liquidity right here. Because price is most likely going to want to take out all of this and fill this gap if it does want to continue higher on the higher time frames. So that is another example on how to use these lower time frame conditions. Okay, so now that we know what to do, here is an example of what not to do and not how to use conditions, right? So say we literally are in a clear uptrend, right? And we do finally tap into this high time frame bearish P to array and we're anticipating a reversal. Well, what do we want to see? We want to see our middle time frame, right? Say there's a 5 minute or 15 minute right here. We want to see that get inversed first and then maybe create a bearish gap, tap into that, and then target this as a take profit, right? We don't want to just tap into this high time frame P to array and see the first 1 minute inversion out of it, because price is most likely going to want to do this, especially if it's only a 1 minute. Price is most likely going to want to do this, tap around and then maybe go around, depending on how price is moving. But if you enter off the first 1 minute fucking inversion and you put your stops at these highs and you think that they're protected because they're inside of a fair value gap, well, you just got stopped out, right? So you want to be patient. And again, if you guys need help with being patient in trading, I literally just dropped a video on that yesterday. It's called Patience. I think it's Beginner's Blueprint Day 25. But yeah, you guys want to be patient. Wait for an A++ setup, right? Because yeah, even though we have clear draws of liquidity below us that we can target, we don't just want to enter off the first 1 minute inversion just because you guys think that's where price wants to go, right? We want to wait for the whole setup to play out. A+ setup, we're highly convicted, because at this point, we're not really highly convicted. Yeah, we have good draw on liquidity, but nothing's really telling us that we are going to go down other than this 1 minute inversion. And we don't want to just enter off a 1 minute inversion. Okay, so hopefully that makes sense. Let's go over the checklist, and yeah, that'll be it. And then I apologize if I sound like this. I've fucking exhausted. I haven't slept really that much this weekend. Been in South Carolina watching my brother play baseball. So that is that. So let's get into our checklist. Okay, so jumping into our checklist, let's go over it one last time, right? So for the first thing we want to see is we want to tap into a higher time frame P to array, right? We always want to have our higher time frame narrative in our general direction. So that is going to be step one, right? Wait for price to tap into a higher time frame P to array. Step two, price then invalidates a 5/15 minute fair value gap. So for bullish, we want to disrespect a 5/15 minute bearish gap. And if for bearish, we want to disrespect a 5/15 minute bullish gap, right? Say we get the higher time frame tap into a P to array, we then invalidate our middle time frame fair value gaps. What do we do after that? Well, we want to wait for a fair value gap on the 5 or 15 minute to open up in our favor, right? So for bearish, we want to wait for middle time frame bearish gap to open up. And if we're bullish, same thing. Wait for a middle time frame bullish gap to open up, favoring our bias. Okay. So say all those three things happen. What are we waiting for now? Well, we want to wait for price to tap into our condition, right? This would be condition number 2, which is actually number 3, but it would be condition number 2, right? Because condition 1 was invalidating those other trends fair value gaps. Then we created our own fair value gap in our favor, right? We want to wait for a tap into it. And then what is our entry model? Well, the highest lower time frame inversion out of it. So if we have a 2 minute fair value gap, we'll enter off the 2 minute. If we have a 3 minute, we'll enter off the 3 minute, so on and so forth, all the way up to the 5 minute, 1 through 5 minute. And then number 6, and lastly, we want to make sure our draw on liquidity is still valid and price has a reason to go there, right? So if the fair value gap that we're targeting is already filled, probably don't want to be targeting that fair value gap. If our liquidity that we were targeting, London lows, Asian highs, Asian lows, or you get what I'm saying, right? Higher time frame draws on liquidity, data highs, data lows, if those are already swept out, no point for price to go that way, right? So we want to make sure our draws on liquidity are still valid. Let me go back up one more time so you guys can screenshot all of this if you guys haven't already, right? Here's your example of what not to do. You do not want to enter off the first fucking 1 minute inversion out of tapping into a higher time frame P to array. We want to wait for our middle time frame or conditions to open up, right? And then see if we respect those or not. Here is our lower time frame condition example, right? Open high. See how we tapped into a 15 minute and not an hourly, right? So this would be tapping into a middle time frame P to array. And then if we inverse our lower time frame with speed, then we can enter off it, right? But we don't want to tap into an hourly and take the first 1 minute. That makes no fucking sense, especially when the draws on liquidity are mad far away, right? We want to see price open up. Now this LRL and this unfilled hourly is right below us. So then we can then take, let's say, 2 or 3 minute out of it and then target that LRL and unfilled gap. And then lastly, here is our, here is our continuation example, right? If we're in an uptrend and we leave an unfilled gap below us and we still have draws higher, we want to see price retrace into that gap, right? And then see a rejection out of it, lower time frame inversion out of it. Then we can still target those. And then lastly, for our reversal, which is our main thing, right? Higher time frame key level, disrespect bullish order flow, tap into a bearish PD array, reject the bearish PD array while disrespecting bullish order flow, right? So screenshot this if you guys need to write it down, take notes. With that being said, that'll be all for today's video. When you guys are trading tomorrow, because today is Sunday, when you guys hop into the market tomorrow, start setting conditions. I'll be live trading, so I'll explain to you guys what my conditions will be there. So with that being said, you guys have a great night, and I'll catch y'all boys tomorrow.